management buyout works. In today's market, where there is a lack of credit, which drives valuation multiples, whereby there is a lack of cash available and lack of liquidity for a greater breadth of potential buyers for one's company, you need to focus on the needs of the principals of a company in terms of exiting. So what meets the needs of a person who wants to, or an owner of a company that wants to leave his or her company or sell it, might not match the issues we have or that we have in today's economy. So an exit strategy, it really starts with the owner. The owner has to be ready to sell. And sometimes when the owner is ready to sell, it might not be the best time to sell in the market. That doesn't mean that the owner is not going to get a very good deal. Remember, it's not all about price, it's also about structure. And you might get less of a price, but you might get a much more cash up front versus a much bigger price, but much less cash up front, and then you are, as an owner, tied to all these different conditions precedent to obtaining the rest of your value down the road, which might not be sensitive to your needs today. So the MBO, the management buyout, is a very firm and robust way to exit today for any owner, especially if he or she has a capable management team that is entrusted with taking a company forward, which is a natural risk mitigant to any prospective buyer, whether strategic or whether financial. Now you need to split an MBO opportunity into these different baskets of financial and strategic buyers. Obviously, if a strategic buyer comes along, like another company, a larger company or a competitor, the management buyout might not really be a management buyout. However, the management team that is there, being a strong perceived team, is going to make any buyer a lot more comfortable in driving value. Now, strategic buyers traditionally bring a lot more value to the table because they're not looking at it from a financial metrics point of view primarily. They're looking at other important value drivers, whether it's customer acquisition, creating a greater regional footprint, or just diversifying their service suites for existing customer base that they have, or for extending, filling in a service suite in their value chain of overall platform and services in buying that particular company. That's for a strategic buyer. For a financial buyer, like a private equity group in today's market that focuses on management buyouts, I would say that there are two types of private equity groups. There are those private equity groups that what we call our buy and build private equity groups, and there are those private equity groups that are what we call leverage buyout type private equity groups. Well, what should scare one buyer in making a decision between the two right away is that word leveraged on the LBO, because leverage buyout, because you know that a private equity group that does LBOs is not going to look to buy the company from a strategic point of view. They're looking at much more of a financial based platform and set of goals for the ends justifying the means of buying the company. For a buy and build private equity group, they're looking to partner with a management team, and they're not limited to only putting a certain amount of equity in the overall transaction price. They could possibly put 100% equity. We in fact have many financial buyers, private equity groups that do that today in today's market, and they're usually the ones that offer the best value-added proposition in monetizing a principal's value in a company. MBOs drive a strategic advantage from a risk mitigation point of view versus just selling a company without a management in mind to get a piece of the pie, so to speak. They offer, one, natural transition to management, so the private equity group does not get concerned with the future and transition and maintaining the platform already there with the same culture. And most importantly, they drive a financial and operational comfort in doing what they do best versus what a private equity group does best. Private equity group, a financial buyer, mainly focuses on being a financial partner while they let a management team operate. And if you already have that management team in place with some skin in the game, so to speak, then they're very comforted in moving forward.